Good morning, everybody. It's the 19th of May. We've made it to the end of another week. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mates. How are you?
Yeah, all right, thanks. You?
Good, good. Yeah, not bad, not bad.
Up the hammers?
Come on, you irons. Yeah, massive in Europe, everywhere they go, apparently.
Yeah.
So,
Good luck to them
yeah,
against Fiorentina.
nice one.
Cool. Right, let's get into it then. So let's go through the latest headlines. Then we get onto the charts, have a look at how markets are wrapping up the end of the week. So in terms of the latest news, we had mixed Philly Fed survey data yesterday. The manufacturing index recovered to minus 10.4 for May from minus 31.3 in the previous month, and much stronger than the consensus forecast of minus 19.8. Jobless claims were on the decline. We saw that decline to 242,000 in the latest week from 264,000 previously, and significantly below the consensus forecast of 254,000, while continuing claims were marginally lower. We continue to see hawkish Fed rhetoric. The Dallas Fed President Logan stated that the central bank still has work to do to achieve price stability, and she is concerned whether inflation is falling fast enough. She recognizes the risk of tightening too far or too fast, but added that she considered the data and this time does not support skipping a rate hike at the June meeting. The dollar went on to hit an 8-month high yesterday. Sorry, not 8-month, 8-week high, as it edged higher after the US data releases and post further advances following the hawkish comments from Logan, and now sits or very close to an 8-week high. Japanese inflation increased overnight. The core inflation reading went to 4.1% for April from 3.8% previously, and above the consensus forecast quite substantially, actually, of 3.4%, maintaining pressure on the Bank of Japan on their policy shift, although the yen secured only slight relief, with dollar yen trading at a 5-month high. Today, we've got a speech from Fed Reserve Chief Chair Powell. He's due to make comments on Friday with participation on a panel discussion. Markets will be focusing on any comments surrounding the potential June policy decision, and that's not till 4 p.m. UK. So let's get onto the chart. Steve, do you want to kick us off with a look at cryptocurrencies?
Yeah, sure. I'll just share my screen.
As always, if there's any requests on markets, please feel free to post them up, and we'll do our best to cover as many as we can.
Yeah, got a couple of different formations going on, the weekly and the daily. This is the daily formation that we're looking at, really, the head and shoulders formation. We've broken through the neckline. We've retested that neckline. Yesterday's bearish outside candle, so that's pretty negative, really reversed that sort of like retest of that neckline. So formed a high around about the 27,500 level, and then pushed lower overnight, but pared back from the worst levels of 26,375. And this morning we're around about where we closed, 26.9. So overall feels a little bit bearish, although bearish momentum is slowing down on the MACD on the daily. On the 4-hour chart, let's get a little bit of sight on the shorter term. We are battling with the Ichimoku cloud. It's capping price action at the moment. Prices really need to get back above the 27,690 level to stave off this negativity that we're seeing. And as you can see, the reaction from yesterday's move lower has been slightly positive overnight, but not enough really to let the bulls rest. So further downside potentially in Bitcoin. Obviously that travels over the weekend and trades Saturday and Sunday while we're taking a bit of a rest. Ethereum, same sort of price action really. The 4-hour cloud, around about 1846, 1850 is the resistance level to watch. Interim resistance before that is at 1837. On the downside, we've had the dip lower, went to about 1775 and then reacted higher yesterday afternoon or yesterday evening. And the main support really to watch is the 1737. Remember that 1730 level that we talk about a lot is quite pivotal. So a bit of support down below to test. XRP did react higher. It's run into the downward trending resistance line and having a bit of a battle here. So this ABC correction, looks to be a bit of a bottom really from that 41 cent level. Resistance now coming in above this trend line, which is we're trading right on it now at 46.17. Above that we've got 48.80. Then we've got 54.60, and then the major resistance at 58.5. Just wanted to sort of highlight one more thing from the Bitcoin, is this opposing potential formation, the inverse head and shoulders formation that has a measured move target all the way up to 35,000, and it looks like we're retesting that neckline that we broke. So that's the longer term chart, that's the longer term formation to watch. The daily formation might play out quite nicely, and this could still be active, so be careful if you're thinking about shorting Bitcoin. Not many people do. Commodities, gold has definitely had a bit of a rough ride this week with that dollar strength. Weekly chart, you can see breaking down through the support at 1970. Did it very, very quickly yesterday. Little bit of a head and shoulders type topping formation here. Major level of support really below this is 1935. That's a challenge for the bears. Looking at the daily chart, we can see we had a bit of a intra rally upward trending support line. This we found this level of buying quite continuous all the way up, and we broke through it yesterday. Tuesday we broke through it, and we've been sort of like pushing through it since then. Now the level of support I'm looking at the moment, apart from maybe the 1936 level, is this 1961 level, around about there. We have dipped below it. We got down to 1952 yesterday. Rallying higher today, so a little bit more positive today, but that dollar strength is definitely something which gold will find difficult to shake off if that continues. So now we have got a little bit of a 12-hour rally going on. Resistance really coming in around 1970 now, which was a previous support. So that's the levels to watch. Above that, 1993, 2000, and then levels above there, but I don't think we're going to see them today. On the crude oil, a little bit mixed since the rally on from Wednesday's oil inventories. Yesterday's price action really traded within the previous day's range, so nothing much to talk about here. The MACD overall looking quite positive. And today's price action, we're off to quite a nice start, but a bit of a triangle formation going on here. So really sort of trading mid-range. Really would resistance coming in 73.75, support at 69.43 there. On Brent crude oil, similar sort of price action, resistance at 77.45 and support coming in at 73.40. I think there was one other thing I wanted to look at on gold, or was it not? I can't remember. No, I think it's indices. I've looked at a couple of indices already, and looking to see what's going on there, but I'll show you that after the FX. Natural gas has at last broken through some major resistance. On the daily chart, we had a this well, lots of things going on with this double bottom here, which we sort of like broke through, tried to hit 259 was the target, so that we spiked higher to 257, so that formed resistance. Again on Tuesday we spiked higher to 257, so again that acted as resistance, but as you can see yesterday we've smashed through that resistance now, and we're trading nicely higher. Still got potential for a larger double bottom formation. The neckline for that is at 305, so still a way to go to there, and we're running into a little bit of interim resistance from these highs all the way back in March at 275. So that's the next level of resistance to watch, but natural gas having a decent time of it. You can see on the 4-hour chart looking pretty decent after that move around about, well, that would have been the inventories as well. Thursday inventories come out for natural gas, so that would have led to that move higher, and it's quite significant, forming a bit of a bullish flag on there. So potentially more upside in natural gas. That could be one for come to head trade idea as well. Looks pretty decent indeed to see that extension, if we can, up to that $3 level. That's a really strong move in that short space of time. Let's take a look at the dollar and indices and the FX, and then I'll dive into a couple of indices. There's some interesting things going on in there as well.
Okay, eerily, the dollar chart looks very similar to that of the natural gas. You talked about the potential for a double bottom to form, but obviously needing a lot of work to do. But you can see here on the dollar index, there's been a big move to the upside. Talked about this being maybe a rounding formation taking shape. We had to break through resistance at 102.23, which we did. Then we faced this next level at 102.83. Seemed to come up just shy of that on Wednesday, but yesterday there was no doubt there was a break to the upside there. Very impulsive move higher. And really kicking on to the upside. So very strong move there from the US dollar. In terms of what to expect now, maybe a pullback to test this previous resistance, which should be now support. That's at 102.83. Interestingly, looking at the intraday charts, I was looking at the 30-minute because maybe there's a bit of a short-term top forming here, maybe a very small double top. The neckline that we talked about, this 102.80 level, is all the way down here. So potentially a bit on offer there if you're looking for a quick counter trend trade here on the dollar index. We'll be able to replicate this also on euro dollar, which may make it a bit easier to trade. But yeah, potentially a 3-to-1 setup there if this is to play out and actually to form a very short-term double top. Highly speculative. Obviously, looking at daily trend here, it is very strong, and the chances are we are going to continue moving higher based on the technical outlook. Looking at euro US dollar, so we've seen a break of trend here. Let's get rid of this blue line because it's confusing things a bit. So we saw the channel that was in place for a significant period of time. We then saw the breakdown. Really, that happened last Friday. We then saw a retest of that level, and prices have continued to move to the downside. So it looks as though we may be trading in a bit of a range for a period of time here. The upside being capped around these levels at 110.75. The lower end of the range coming in down at 105.51. We've also got a 38.2% fib level here as well. That's a measurement from these lows in September to these highs that we posted in late April. And this is coming pretty close to this key area of support. So looks to be maybe heading in that direction. Unlikely to be in a straight line, of course. So we may get some chop, but ultimately we may see prices dip down towards those major supports. And if we take a look at what we just looked at on the dollar index, if we look at the half an hour chart or 30-minute chart on euro US dollar, potentially a bit of a bottom forming here in the very short term. Highly speculative, of course, because we're going against the trend, but maybe a bit of a double bottom here. A nice break through that resistance at 107.80, a nice pullback into it in the last hour or so. Maybe a candidate for the gun to the head trade today as well, looking at it purely from an intraday perspective. Let's take a look at some of the other dollar markets, just because we have seen such strength there, and see how that's impacted. So dollar yen, we can see this has broken through resistance at 137.91. Capped on a couple of occasions, finally broken through, looking pretty positive. We've got a 50% fib level just above at 139.58. But as it stands today, we've broken through that resistance and maybe looking for a bit of a retest of that newly formed support at the moment. Let's take a look at dollar CAD, see what's happening there. Not an awful lot. These two seem to be cancelling each other out at the moment. Look at dollar Swiss. We can see that's rallied into resistance. We saw a breakdown of this key level here at 90.85 and now attempting to retest that level. Be interesting to see if we can get it back above it or whether or not the Swiss franc is going to continue to remain the dominant pair there. Let's look at these commodity currencies. Big move to the upside today on Aussie dollar. In the short term, still trapped within a bit of a range between 67.93 to 65.67. Looks like that's going to persist for a little while longer yet. Cable, we haven't looked at that. So we've seen a break of trend here. This is the first close below this trend line that we've seen for a significant period of time. We can see yesterday some bearish price action closed below that level. Very minor pullback today, forming a bit of a doji as things stand. But this looks like it may be a bit under pressure as well. So potential there for a continuation lower. We've got some support here at 123.44. Looks like there's a couple of requests coming in for yen currencies. Let's look at Aussie yen and CAD yen before passing over to Steve. So this is Aussie yen, still trading in a downtrend as we can see. In the short term, trading in a bit of a corrective channel, attempting to form a sequence of higher highs and higher lows. Still got a bit of work to do. What do I feel about this in the short term? Not entirely sure, to be honest. I haven't really got a view on this at the minute. I mean, I have been bearish of it for a while, given that we've got this bearish trend in place. but it's testing the patience of the bears because it continues to grind higher. But how much further has it got? It's a little unclear, and there's no real clear signs of any candle formations or any chart patterns that are giving us a clue either way on that at the moment. CAD yen, to finish up, so this had a huge area of resistance here between 101.41 to 101.65, and this was capping advances and had been doing that for quite some time. But here we can see on Wednesday we saw a big push to the upside, breaking through that resistance, so that now should act as support on any retest. In the short term, we can see a short-term uptrends in place, so it looks pretty bullish. Maybe even a big bottom's taking place here, a big double bottom pattern which will complete or has completed on the breakthrough these resistance levels, and maybe we can start thinking about higher prices here. The next area of resistance I've got on the chart is up here at 104.56, so looking pretty positive, broken through that resistance. So now we can invalidate the bearish case on that which we had previously, and maybe start thinking about some higher prices here on CAD yen. Over to you, Steve.
Lovely, thanks, mate. Yeah, looking at indices, I'll quickly whiz through these on the FTSE, UK-based indices, although there's a lot of dollar in there as well, a lot of banks in there as well. Downward trending resistance line, really struggling to move above here. We've also got a nice short-term uptrend to consider as well now. So this looks like a bit of an inverse head and shoulders formation, potentially forming a bottom. That will tell us where the real sort of like move could take place, is around about where this neckline is. So that'll be a key to watch, 7,800 on FTSE. So look out for a break above there. If the bulls really get their teeth into this, this could rip higher. Obviously the all-time high, not much further above there, around about the 8,050 level. So yeah, that's for me one to watch. On the downside, support coming in around about the 77.15 to 77.35 level. That'll take out that upward trending support line, and the major one really at 76.81. On DAX, that's had again a rip high. It's like taken out that resistance on Wednesday, come back, nearly retested the reverse trend line, not quite. And on the show yesterday morning, actually was shooting higher on the 1 hour candle. We spotted that. That led me to take the gun to head trade idea of a long in EU50. Would you believe? No one believes it, but you can see it. I can prove it. There's a video footage. Didn't manage to post it up, and it was a bit of a winner, so I'm a bit gutted about that. But overall, this is remember the weekly chart and the weekly levels we were talking about on the DAX. We've run into now this resistance level. It is the all-time high, and that is incredible, really, thinking that the DAX is at the all-time high, 16,297. So we are probably 80 points away from sort of taking that out. There's the high, yeah, 16,297.7. So we call it 16,300. For me, that's got so close, or it is so close at present. So you can't, I don't know. Yeah, great place to fade, fantastic risk reward, but so after such a strong rally this week, it takes a brave man to step in front of that train. EU50, not quite there. That's got a little bit more to go, 4,420. I think our target yesterday was around about the 4,400 level. Didn't quite get there, but still, you know, stole a march a little bit on that. So further upside there, support really coming in around about the 4,270 level. On the shorter term charts, yeah, you could sort of have a case really sort of saying, oh, a few shooting star candles appearing. This looks like the rally high is exhausted. And if we take this swing high from the 27th of April, where we got up to 4,397, then you could sort of like say we've failed to break that resistance. But again, we seem to have a shooting star candle back here, the pullback, and then the extension higher. So could have a little temporary pullback here, but there's no real sign that this is topping out at the moment. So be careful of that one if you're trying to short. On the let's look on the Dow. Again, we're sort of like we've moved higher over the week. We're trying to recapture last week's highs. Not still a bit of way off it at the moment. Resistance really coming in at this downward trending resistance line around about the 34,000 level. For me, that's like key today as we go into this week. The daily chart, you can see this a bit more clearly. We posted a higher low, and a nice, really strong move on Wednesday has led to further upside yesterday and today. We've made that high on the week, and resistance, as you can see, coming in around about the 33,790 on that daily chart. Nasdaq has continued higher. Nothing stopping this baby here. Obviously, taking out that high that we had from August 2022, and extended aggressively higher. Looking really positive at the moment. Overall, nothing really. Again, for me to sort of like consider shorting any of these indices, and the S&P as well also edged above that, the previous swing highs, and that resistance level at 4194. Next level of resistance for the S&Ps coming in at 4325. That's 120 points away. That's a long way to go. Nothing really in between there. I suppose you could say maybe 4215 from this high here from August 22 as well. But yeah, at the moment, it's ride the bad boy higher, I think, on the indice front.
Cool. So let's have a look at the gun to the head trades then. So only Steve yesterday, and he did have a winner on Euro Stocks 50. So well done to you, Steve. Was that timed out, that one, I take it?
Let me just, I can show you it on the thing up when we jump back on the.
It's on the screen now if you can, unless you're not logged in.
Yeah, it was really, I was looking at everything looked pretty positive, really. It had a real big move on the show when we were talking, and in the 8 o'clock candle ripped higher. I took out this resistance at 4361.5, and that's where I got long. The stop was really tight because I wanted to get some good risk reward, and the target was around about that 4400 level, as you can see on the hourly chart. Broke higher nicely, had a really good run at it, got up to 4383, then pulled all the way back, got halfway towards the stop. As you see, my stop was at 43.43. That's not a big stop, but then ripped higher just into the close. So we managed to get about half an hour out. About 1 hour out of it. So that was pretty decent. I was happy with that one because I never go short of indices, and when I do, I always tend to pick a loser.
Yeah, no, nicely done. Okay, so just a quick reminder of the rules of engagement here. So Steve and I are picking trade ideas live on this stream that we do every single day. Both of the ideas must have stops and targets. It must have risk reward ratios better than 2 to 1. We close these ideas out at 9 p.m. unless the stop or the target is reached prior to that, and we risk 1% of our trading capital on each of these ideas. We've got a live account running, got £2,000 in it, pretty much where we started at the start of the year. We've had a bit of fun in the meantime, and we're just trying to manage risk accordingly and have a consistent approach. So we've got to pick 2 new ideas today. I don't know if you've got anything ready, Steve, or if you want me to try and blag my way through something. I'm quite happy to do that.
Yeah, if you've got something, Joe, I'm struggling a bit.
Well, I think now the dollar's woken up, that's kind of a bit interesting for me in that we've seen a decent break to the upside here on the US dollar, and that's of course impacting a number of different asset classes. So Euro US dollar for me looks as though we are going to see maybe some lower prices, but I'm being a bit confused by the fact that we've got this short-term bottom pattern on the half an hour chart. We can see a nice pullback into support there, which seems to be doing a decent job at the minute. But then I was looking at gold as well. I know obviously you've touched upon this, but it's obviously whacked into a pretty significant resistance area. This is the weekly chart here. We can see going back to 2020, these highs have been hit, and now we're seeing a bit of a reversal take place on the weekly candle after failing at these levels. So is this set for a further decline? Looking at the daily, you can see here a bit of a double top formation as well, a retest into the neckline. I don't know, I'm a little bit confused. I don't generally trade gold, but this would obviously be more in line with the dollar bias that I'm thinking about. So maybe this is the one to go for. Maybe selling gold now. let's give that a go, shall we? So I'll go with a stop loss at 1977.7. Let's just we have issues with getting this on, don't we, with the size?
Yeah, gold is difficult to get on. I don't know if silver could be the next best thing, and obviously silver never. If you're selling, if you want to sell gold, selling silver is probably a better thing because it seems to sort of like struggle a bit more.
Yeah, it doesn't really have the same sort of chart setup though as gold, which
Right, that's
well,
important.
yeah, I mean, yeah, it's still pretty bearish on the weekly from last week, so that actually front run gold essentially. We saw the weakness happen quite
And also
significantly last
hourly
week.
hourly chart stalling around edge moving cloud at the moment as well, forming a bit of a shooting star over this hour time frame in silver.
Yeah.
The risk reward could be pretty tight on that. You could sort of like have like a sort of like a $7-8 risk against like just a half a pullback would be decent. But yeah,
I think I'm going to go actually with dollar yen now. Talk myself out of all of those.
yeah,
I'm going to take a look at this because if we take a look at the daily, we can see that it's broken through a decent area of resistance. This blue line at 137.91. We're getting a bit of a pullback today. So from a technical perspective, I expect that to hold. That previous resistance now turned support. So let's see if there's any truth to that and get a trade on here. So this is the level we're talking about getting a retest to. Not quite there, so I'm getting in ahead of where I'd ideally like to, but I've got a gun to my head, so I've got to do something now. So let's get that on. Let's buy at a market. Let's go with a stop loss there. That's at 137.50. And in terms of the upside targets, because obviously we're breaking into a bit of fresh space on the upside, I need to try and pick a target. So I've got the 50% fib on the daily, which is at 139.58. What will that give me? 139.
2.46 around about there.
Yeah, that'll do, won't it?
That'll do, donkey.
Okay, there's the trade getting long of dollar yen. So let's see what happens. Remember, we've got a Powell speech at 4 o'clock, which could alter the outlook for that one, but hopefully I'll be out of it by then with a profit secured.
Yeah, there's the trade on live on our account. Our account is back to where we started, Joe.
Yeah, we've had some fun though, as I said.
Yeah. Okay. So is that what it's all about?
It's an entertainment business, Steve. We're in here.
Right. Yeah, it's funny. I sort of feel the same. It feels like dollar has had a great rally this week, but it's like a little bit nervy about whether we can continue through to the end of the week or might have some sort of pullback today. That's the only thing that is concerning me at the moment. The weird thing is, I've been talking about indices don't stand in front of it, and then I sort of like, you know me, as I start to look at an index, I find some bizarre reason to sell it. And I'm sort of getting that feeling in euro, mainly the 4-hour chart here could be posting an evening doji star formation on the 4-hour chart at previous resistance levels, 43.91, as you can see over here. So we've taken out that high, and all this would require is a small pullback. So this would be a very quick trade. We could be either taking profit or stopped out of this before the end of the show. That's what I'm thinking. If I'm shorting at these levels here, having the stop at the yeah, well, if I leave it there, where do I need to take my profit? See, that's where I think we could get up to. Something like that. Yeah, I think I might go for something like that, Joe. I'm going against the major trend, so be careful of that. Let's try and get 1% stop on. Can I risk £20 and 1 pence? Close, £19.80, and the target is 43.50.4. So that's about 3 to 1. It says, oh, it's just pip up higher here. So I can move the stop up to that 43.9.6. Oh, there we go. Feels good to me. Get it on, Steve, quick. Yeah, so I'm basically banking or betting on the that being a sort of temporary high, a little bit of a pullback before we extend higher. So enough caveats in there to get through trade idea.
Yeah,
2.2
absolutely.
yeah. So let's see.
Okay, good luck. Okay, so data-wise today, it's pretty light on the calendar as we close the week out. We've got a Fed Chair Powell panel discussion, which is at 4 o'clock UK time. So obviously a bit later on in the day, but there's plenty of other stuff going on. Obviously, this US debt ceiling situation is pretty much front and center as we try and get a resolution there. And normally we do when we see these things. It's just a big kicking of the can down the road, and I'm sure we'll get that again, which may continue to push equities higher in the short term. Next week, we've got global PMI data and we've got Federal Reserve minutes. So we'll be watching and previewing those ahead of time. Thank you, everybody, for watching this week. We hope you've had a successful one. We'll be back on Monday. And until then, everybody, trade safe and we'll see you soon.
Yeah, have a great weekend all.
Bye-bye.